Hey, it's David. What I want to do today is go over the trade that I took after the inventory report that came out at the 9:30 a.m. Central Standard Time today. Um, I don't really pay attention to the economic release itself, other than I don't trade until it until after it's released. With that being said, what you see in front of you right now is um, is the 9:30 mark Central Time, where the report comes out, right? And then you see it coming down and then whatnot. This blue line here is actually the pivot point, which today was at 60.90. Now, just so you understand, this trade on one contract today earned $1,480. Combined, it was 1,508.96. Let's see, where's there it is. Combined, I had 3 trades today. I had one loser for 9 ticks, one winner for 13, and then the big one here was 148 ticks, or $1,480 net profit on just trading 3 times a day. Net gain 1,520 less the $3.68 commission cost of the TST Combine. I net 1,508.96 right here, 11,508.96, and it was day one of the my restart of my TST Combine, which, like if you saw the last video, and if you hadn't seen the last video, I got within 6 ticks of hitting the 11,000, and today I come in for well, let's back up. I failed the Combine. Now I've obviously restarted. I'm on day one again, and I'm up $1,500, so hopefully I won't F up this time around. June 1st, June 2nd, June 1st was my kids' school picnic at the local amusement park called Kennywood, and I didn't feel like trading yesterday with a sick son that was running 102 degree temperature and a fever. I didn't feel like I could dedicate the time that requires that's being required. Now, by the way, the CL port trade, or the crude oil power open range trade, so far for 3 days in June, I won the first, it won the second, it lost today. Figures the day that I traded, it loses. So overall, it's up $360 for the month of June. And since I started this in April of 2015, when I restarted Night Capital Management 1, 2, 3 day trade, whatever you want to call it, this one plan that you see in front of you is up $2,810 trading one contract. This is still, as I record, a free trading method that I still currently have out there for you. I'm sure I'll have a link here somewhere on the website, or on the post, or on the blog post, or wherever you're watching this. There should be a link either directly below this video or on the blog post itself. Usually I put it at the bottom under the PS section. Normally is where you'll find that free method. At this point in time, it's still free. I call it the crude oil power open range trade method, or CL port method is pretty much what I call it. Now, what I want to talk about today is called what I call CLPIT. Now, coming into the trade today, what I do is I find out where the opening range is, and then I trade that. But before all that takes place, the very first thing I do is find out what the open is of the market that I'm looking at trading. In this case, I'm trading the crude oil market. And the open of today's trading, today being June 3rd, 2015, on, I guess this is July's contract, the active contract is July, was 61.02. And I'm going to be referring to 7P. Now, the trade that we're going to be looking at today is actually my entry point at 60.91. And I want to explain that's where it filled me. I would have accepted 60.88. That's where I wanted to be in, and I would have taken slippage to 60.85. So I'd been fine with any of that, getting myself into the trade. 60.91 is where the TST T4 platform placed me in. So therefore, that's what you see reflected on this trade itself, the 6091 here. I think it's this one at the 9:30 a.m. trade, and I exited. Well, you don't see the exit anymore, but the exit was at 12:17 p.m. I think my fill was at, well, we can go back to see when the fill was, but I entered the trade at 9:31-ish. That's waiting 1 minute, and then coming into the trade itself. And I use all of my spreadsheet to help me make decisions. You know, I use the 5-minute, the 15-minute, and I use my trading tick chart that, if I can find it again, I'm trying to pull it back up. Oh, there it is. So you can see. So anyway, here is the volume bar that comes in at 9:30. Now notice that it's up over 2,500. This is what I consider blow off volume, 2816 in this case. And I'm only looking one direction in this particular trade. I was only looking on the short side. I marked the high of the market as it escalated, and then I marked the low, which ends up being this pivot point, which I don't put a horizontal line on, because the pivot point is my horizontal line on the bracketed trade, and I'm only looking to trade one direction on this particular day. With the blow off volume, I'm looking to trade short. So what I wanted to do is get short at 60.88 or better, which ends up being a couple ticks underneath the pivot point. This is actually my fill mark right here. You can, I don't know if you can see that red X, but it's right there. Here's where I was filled. I should have been filled at 60.88. I don't know why it fills me on that at 60.99. Most likely, I would have been filled somewhere between. Looking at this bar that closes, it had a high of 93, a low of 87. So I would have been filled somewhere in that bar between 87 and 93. It filled me at 91. Go figure. I don't understand everything about the T4 platform, but I got 3 tick slippage in my favor. Usually that doesn't work out normally. I'd have been more than happy to take it at 60.88 less 3, so 60.85. The market retraces back to 60.95. I had a 14 tick stop loss according to my rules, and let me show you that. Today's, which I looked at, is 2/3 on this particular trade, looking at 2/3. 13.7 rounds up to 14, and I set up for a 7p move. Now, the 7p move, remember, I was looking for 59.40, and you can see that this is showing 59.29, I guess is what it is. But 59.40 is where I'm physically looking to get out of the trade in that range. Now, one other thing that I want to talk about here is know where your support and resistance levels are. And you can see I have my S1 through R4 through S4 pivot point. Notice the S2 was at 59.41, and you'll notice that my trade exit today was 59.43. I got out before it ran to S2. So that was my ultimate target. I like to go after that 7p target. I find that that's a good overall target. And then maybe sometimes when I want to re-enter a trade, 7p, and if it wants to run to 8 going to 10 is a pretty decent trade as well. I guess that's about it that I want to talk about as far as that goes. Let's look at the trade itself. Like I said, I got in here, and I pretty much followed my stop behind I look at the blue, the 200 SMA, which you can see is blue or purplish line. I follow behind it, but it's not perfect, not a direct science. You know, I'm also using my 1p, 2p, 1.5. If you look at the blog post, I was trailing my stop all day long. I was fortunate enough that I stayed in the trade almost 3 hours a day, and it finally made my ultimate profit target. These are the days that you kind of dream about as far as being a trader. It didn't take me out here because I was up here with my stop at the time. It didn't take me out here because I was over here on the stop at the time. It didn't take me out on any of this as well because I was waiting for this market to run here. It only ran to a low of 26. Now, 60.26, looking at my targets here, I was looking for 60.21 to be run. And I was up above 60.68 at this point in time. So you can see that my stop was up above this market. I was waiting for the so in other words, I'm trailing the stop is what it ends up being. That's the science of how you become successful, by the way. Learn how to use the runners and the one contract runner in this case here. Here was the first time that I saw what I call an HVS bar kick in up over 700. This is the first time that we see the market trying. I think it's the first time. Let me backtrack here. Wait a minute. No, the second time. This is the second time we see the market kicking in. The first time it kicks in here, this could have been a retracement where the market could have been done going down. Now notice that this mark right here is up against S1. It comes back down here to S1 again, breaks through, and then you see this one here. And this one's not as powerful as the one prior to that, so it's still showing weakness in the market. This one was at 878, not above 1,000. So I'm still believing the market is more weak, and it's still in the sense wants to sell more than go up. I put a trend line on the market through here because I noticed that this market was trying to make higher lows or high, it was trying to come off and make it to S1. Once again, I'm above I think I was up above here at 2P somewhere in this area with my stop. I didn't trail, I didn't get stopped out. I kept in, I stayed above this. It continues to fight here at S2 for a while, and then it gives up the ghost. So here's the third time, by the way, the market decides to get up over, or this bar was up over 700 when I was looking at it earlier. Now it's adjusted to 661. I don't know why that does that, but I believe at time of trade that was up over 700 or close to it. Now the market continues to sell off, and then you can see this bar right here, this 1400 bar. And I end up getting, I don't know if you can see this, this is my exit right there at 1217, getting out at 59.43, and reaching real close to the 7P target that I was looking for at 59.40. I could have made that 59.40, but I wanted to be out in front of the S2, reaching down here because it was in front of the S2, was in front of, I had to go through, excuse me, the 7P target had to go through S2, and I wanted to be out in front of that. If you noticed at the blog post, you'll see that I bracketed 30 ticks, and I bracketed 20 ticks, and I would have been able to take, it was a bracket of 43 to 63, and I ended up getting 43. I ended up getting my target, although I would have been completely happy at 43, at 53, 63, 73, anywhere in that area. Yeah, I know that's 40 ticks or $400 or $300 in that case. The 73, 63 would have been, I was giving up 200 to get to the 43, but at this point in time, I've already made a good deal of money. I'm looking at 7P as an ultimate target for the market, and it just happens to be that pretty much ends up being almost the low of the day. This ends up being low of the day at 59.34. If I look at my spreadsheet today, and I put in 6102 up here again, I can see that 5940 ends up, and then 5916 is not run. So I would have had to get below 5916 to run to that 8P mark. It doesn't drop down below. It gets to 5934 and it stops. And then it goes up from that point. But I was well out of the trade before that. I was out of the trade over here as it reached down to the S2, and it reached down to what I believe a great target exit is the 7P that you can get to if you can run. And today I was fortunate enough that I was able to capture most of the run between the 6102, which was the open, and then being able to get in a little below, a little above the pivot point, which, it should have been filled roughly at 60.88, 60.87 area. But regardless, the trade itself, the exit would have stayed the same. I would have come out at 43, a couple ticks in front of the 41, which ends up being the S2. And just so you understand that, that's on my spreadsheet as well. These things you got to know when to fold, know when to all the other things to go with it, but also know how to maximize your gains when they're on the table. That's how you become successful as a trader. That's how I became, went from failure to success, to be able to take as much as I can on my winning trades. You know, that age-old saying that we hear as traders, but we don't. Sometimes it doesn't sink in until later in life when we figure out that, you know, cut your losses short, let your profits run. But I like that third rule to it. If you know me and if you followed my stuff and if you understand anything about me, what I believe in is that you also have to take profits along the run. Now, if I was trading multiple contracts today, I would have been out around 3p on one contract, and I would have trailed the other one at the 7p mark to get out. So I would have made roughly 10p today, which would have put in another 1480 plus another 650 was at around 1500 and well, it's around 1000, almost that'd be almost a $2,000, 2000 over $2,000 day, $2,100 day on one trade sequence, trading two contracts on multiple contracts. So if you like what you see, get in contact with me. This is Dave Knight. Take a look at that free method that I got on my blog post. You know, it really explains. I got 5 videos that go over pretty much everything that I do. And obviously, I'm not giving away the kitchen sink, but it's a standalone product all by itself. And if you're struggling as a trader, you know, it's there. It's free. It's for you to use. It's for you to make money. I don't make anything off it. It's free. I don't know how much longer I'm going to keep it free, but for now it's free. Most likely my next project will be to take 3 struggling traders and hopefully turn them into winning traders. That would be where I am looking ahead as I look into my crystal ball right now. Dave Knight here at 123 Day Trade Knight Capital Management. God bless. Take care. Kind regards. Good trading. And we'll see you on the next video. Bye for now.